Does taxing the rich actually work? Let's talk about it in this video, as well as the new tax implications coming out and how they may affect you. Hey guys, I'm Tim Wolf. If you're new to this channel, go ahead, hit the subscribe button. There's new financial videos coming out almost every single week. So when we're talking about the new tax implications that are being voted on, some of them may happen, some of them may not happen, all of them may happen, or all of them may not happen. But a lot of them are affecting the higher income tax brackets because people want to see a change as far as how wealthy people get taxed. People want to see wealthy people pay more taxes. They're tired of hearing about the Jeff Bezos, the Elon Musk, the Warren Buffetts of the world paying $0 in income tax, or large companies like Amazon paying $0 in tax for multiple years. So the first major change is raising the highest income tax bracket from 37% to 39.6%. Another change is reducing itemized deductions that are allowed for wealthy people or people in higher income tax brackets. Therefore, you're going to have to pay more taxes. The third change would be raising capital gains tax from 20% if you fall in that capital gains tax bracket to your income tax, which would be now 39.6%. Long-term capital gains tax is when you own a stock or an asset for a year or sometimes 2 years. Once you own it for that long, they consider it long-term, and if you sell it after that point, all the profit that you made on it is not subject to regular income tax. It's subject to special capital gains tax, which in the past has been a lot lower than your income tax. But they're looking at changing that to match your income tax, so there's no benefit or no long-term capital gains tax advantage anymore. As well as you may have to owe an additional 3.8% net investment income tax for your capital gains, bringing the total tax that you would have to pay if you're a higher income earner to 43.4% on capital gains tax, when in the past you may have only had to pay 15 or 20%. The fourth is a change to step up cost basis for assets that you inherit after death. So what does that mean? For example, if I buy a stock for $10,000 and I own it my entire life, and when I die, that stock is now worth $100,000, that means technically I profited $90,000 on it. Now, I never took out the stock, I kept it invested long term, so I never had to pay taxes on it. Now, my children inherit $100,000 worth of that stock. Well, in the past, the step up would mean that whatever they inherited at, they start at $0 for taxing purposes. So they don't have to pay any taxes on that inherited stock or whatever the asset might be. With this new change, even your inheritance would be taxed. So if that $100,000 stock went up from $10,000, that's $90,000 that is subject to being taxed, which would be left to be paid for by whoever inherited that stock. So now my children would be inheriting the $100,000 stock, but they'd also be paying taxes on $90,000 worth of profit, whereas before they didn't have to pay any taxes on it. Now, there's a lot of attention when it comes to taxing wealthy people and the inequality of the system being focused around raising income taxes, and that'll solve the problem. However, it typically does not solve the problem, and let me explain why. For example, if you live in California, where there's state income tax, their state income tax in California for the highest tax bracket is 13.3%. You have to pay this in addition to your regular federal income tax, which would go up to 39.6%, meaning you'd have to pay 52.9% of your income to the government, state and federal. 52.9%, that's more than half your income is going to get taxed if you're a higher income earner. Now, this may seem fair if you're earning $10 million a year, because people that don't earn that amount of money are like, oh, of course I could live on $5 million a year. That's still a ridiculous amount of money. Now, my point being, I don't really care how much you make or where you live. It does matter, but at the same time, anyone who has to pay more than half of everything they make to the government seems unfair to me. Because at that point, you're less working for the job you actually work for, and you're more or less working for the federal government. And what you get to keep is less than what the government gets to keep. And this could be dual income families that work really hard with a husband and wife. Maybe they started a successful small business. They had to grind out in the beginning, and now they have a business that actually does well for themselves, and they're not making $10 million a year. These are people that are making $500,000 a year living in San Francisco that are now getting taxed more than half of their income. But that being besides the point, taking money from richer people and giving it to poorer people has never actually solved anything long term if we look back at history. Why? Because if you pick a baby up every time he falls and you don't let him fall, they never learn to walk, just like the old saying. So if we just give money to people and they never learn how to actually make the money or save the money and invest the money to go from a lower income tax bracket to a middle income tax bracket or a higher income tax bracket, then they're forever going to be in the lower income tax bracket unless they teach the principles that are going to help them succeed. Because being wealthy has always been less about how much money you make and more about how you behave with your money, how you're disciplined with your money, how you handle your money. That is what makes wealthy people wealthy. It wasn't because they were given a lot of money, and that's actually a very small percentage of people actually inherited large amounts of wealth. Most millionaires in America are actually self-made. The second issue, which is taxing people or throwing out blatant statements that, hey, we just need to tax the rich. Well, the whole issue with the federal government system and the tax system and inequality between lower incomes and higher incomes has nothing to do with the amount of money coming into the federal government. It has to do with the amount of money that's being spent by the federal government. We don't have an income problem in the American government. We have a spending problem in the American government. We're spending way too much money than what we're bringing in. So all these different tax strategies that we talked about in the beginning of the video, that's said to bring in almost $10 billion a year. That sounds like a lot of money, right? But in reality, when we talk about a government that spends $6.6 trillion last year alone, $10 billion isn't gonna affect anybody. That's less than a 1% increase. It's actually a 0.2% increase. That's not gonna change people's lives when we're talking about 0.2% increase. That's not gonna change the entire lower class and the middle class and bring them up to plane with a higher class. Now I wanna kind of call this part 2 of this video because we're gonna shift to some ultra wealthy tax issues. When we're talking about the CEOs like Jeff Bezos and Elon Musk and Bill Gates and Warren Buffett and ultra wealthy people worth billions of dollars, now there's a certain level of equality, and I get it. There's a lot of tax loopholes that these guys use to avoid paying taxes. So why don't we just target them and it'll solve itself? Well, there's certain things that people don't realize is those people are extremely wealthy because they're extremely smart. And when you're extremely smart, no matter what sort of tax laws the federal government seems to throw at them, since the beginning of time, these ultra wealthy people have always found ways to work around it. And I believe they will continue to find ways to work around it. Now, you first have to understand that these ultra billionaires that are worth $100 billion or $200 billion, that doesn't mean they're making $100 billion a year. That just means that the total of all their stocks, all their real estate, all their assets is worth $100 billion. They only make a couple $1 million a year or $100 million a year. Or Elon Musk makes $0 in salary from Tesla every single year, but he's still worth over $100 billion. That means it's just their net worth. It's not how much they're making. When you raise income taxes and you have a guy like Elon Musk who makes $0 in taxes, you're not changing anything. Now let me explain some of the tax loopholes that these guys have used. Warren Buffett has notoriously said he pays less in taxes than his secretary pays, and that's an issue. He believes that's an issue. He agrees that's an issue that needs to change. The reason Warren Buffett pays less is because most of his wealth is from his company Berkshire Hathaway, which he has an extreme amount of stock in that company. And like we talked about earlier, long-term capital gains tax, because he'd owned those stocks for so long, when he withdraws the money, it's not income that Berkshire Hathaway is paying him. It's his own stock in the company, withdraws it, and he only pays capital gains tax, which right now the highest number is 20%. So he pays 20% on all the stock profit that he withdraws from Berkshire Hathaway. And that's what he lives off of. He doesn't live off of an income like you and me. He doesn't earn an income like you or me. So raising income taxes isn't going to affect that at all. Or take Jeff Bezos, for example, who is the wealthiest person in the world, worth almost $200 billion. Owner and CEO of Amazon. Another key loophole that these guys use is because they own companies, they own things like real estate and businesses and stocks, is they can shelter a lot of expenses within those businesses. If Jeff Bezos has to get on a plane or a jet or a helicopter and fly to a meeting that revolves around his Amazon business, the expense for him to get a car to go get that plane, the plane itself, the maintenance in the plane itself during that period, the trip itself and the trip back is all tax-free because it's a business expense. They write off all their business expenses so that they don't have to pay taxes on it. Another example would be if Jeff Bezos goes out with a fellow employee or a client of Amazon and it's a business meeting and they spend $10,000 on a dinner. Well, that $10,000 is going to be a business expense. It's going to be a tax write-off, and he's not going to have to pay taxes on any of it. So when you go out with your work friends and you spend money on dinner or drinks or things like that, you're paying tax on that money. Jeff Bezos goes out with work people and he doesn't because it's a business tax write-off. Or we can use Elon Musk, for example, who avoids paying income tax because he doesn't take a salary or any sort of income from Tesla, and he avoids paying capital gains tax. So if we try to raise the capital gains tax, he's avoiding that too because he doesn't actually sell any of his stock in Tesla. What he does is basically borrows against himself or borrows against Tesla. Elon's notorious for this. According to the Financial Post article, Elon Musk has over $548 million in personal loans from Morgan Stanley, Goldman Sachs, and Bank of America. So he leaves his money invested and borrows money and lives off of that instead. And sometimes he even trades it for equity in the company to further avoid paying taxes when his loans are due. So as you look at this as a normal person, how do we solve the inequalities in the tax system? There are certain loopholes that can be buttoned up like we talked about that these ultra wealthy people are using. However, they're always going to be one step ahead of the federal government. They're wealthy because they're smart, and if they're smart, they can know how to use the tax laws to their advantage. And the federal government, everything that happens there is always very slow, and there's always ways to work around it. Instead, I'd rather you focus on yourself and what you can control and use certain tax advantages that you have access to. For example, here's a list of different accounts that are tax advantageous that's available to most people regardless of how much money you can make. Learn about them and start using them to your advantage so you can start building your own wealth, and you can build assets like real estate, stocks, businesses, and increase your income. Thanks for watching, guys. If you learned anything at all, please go ahead, hit the like button. It helps these videos out a lot, helps me to keep making the videos. And as always, please subscribe if you're not already so you don't miss a single video.